Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Wednesday, November 28th, 2012. All right, let's start off by looking at the S&P futures, the E-mini futures, and this line in the sand, this neckline that was produced by the infusion of capital, the Bendragi bump, I call it. The triple head, the right shoulder right here, left shoulder, triple head, right shoulder, came down here into just before Thanksgiving, and then we had a bump up right into resistance. This top line, this top trend line here bumped right up into it on Monday's close, and Tuesday it went above. Tuesday during overnight it went above a little bit and then started coming down. So this is resistance into the, let me see, this is the 89 period moving average, this is the 55 period moving average, and this is the neckline, which was trending down in the S&Ps before we got this massive infusion of capital. So that's all taken out. We're back up to this resistance. In order to get above this, would need another infusion of capital because things don't look all that hot. Europe is still, Europe hasn't changed much. It's all a lot of, there's still bailout talk. There's still riots, protests going on. It really doesn't look all that good fundamentally. As far as the closing prices go, you can see that this neckline so far is holding with all these waves below zero. T5 is still below zero even with this massive bump up for 4 days, which was a 1340 up to 67 point move on the S&P, and it really didn't do anything to these waves. T1, T2, T3, T4, T5, which, if you're just joining me, are called the Triton waves. Okay, instead of just looking at the daily on the Triton waves, on the ES, I want to look and see what happens. I like looking at the 144 cash and the 144 24-hour chart. So in the 24-hour chart, on November 7th, it came down. It basically started crashing down here, and it took it from about 1414, and it didn't go back above zero and on T1 until 1454. So now we're in the same situation here, and it's kind of like an hourly chart, I guess, because it came up to this trend line that goes back about 3 or 4 weeks, and it came above it and then came down below it. So if you look at this, if you look at the white hash mark, they're going down by about a half a point each hash mark, which is 144 minutes. So there's so much weight to it that overnight it should go below zero on T1. Now T5, if you can see here, is already starting to roll over. It never made it above zero on the longest wave line I use in my arsenal, and it started to turn back down again. So all we need is for one more hash mark to come down. Now, so if we look on the right-hand chart, this is the 21-minute cash. And as I move my cursor over, you can kind of see that that in terms of time, the right-hand chart takes up about half of the left-hand chart. So you can follow the, if T1 goes above zero on the 144 overnight 24-hour chart, you can see where it just about matches up with T2 on the 21-minute cash. So I just like to use this left chart over here as like confirmation to see what's doing overnight. One of the things I saw during the daytime, T2 on the 21-minute chart went below zero. T1 is completely below zero as of Monday, Monday at noontime or just before, and T2 went below zero on the cash right about dead even on the day at 11:30. So at this point, knowing that we had established on the daily over here a right shoulder, left shoulder, triple head, neckline, and then the beginning of a right shoulder, I was just about, in my own mind, thinking that right here, this is the top of this run, because it's on the left-hand chart, it's run into tremendous resistance, and it's still flirting with the 1400 on the S&P. That as soon as this went below zero, as soon as T2 on the short wave went below zero, I was thinking, I'm about ready to stick a fork in this and call this a day and say that this is shortable, when all of a sudden Senate Majority Leader Harry Reid came out and said there's been little progress made in the fiscal cliff discussion. So before I had a chance to stick a fork in it, Harry Reid stuck a fork in it, and all of a sudden everything, all hell broke loose, and it came down from 1403 down to 8 points on the S&P, which brought this even further into the zero, near zero, and we'll wait and see what happens. But I think this goose is cooked. So I'm looking for more downside action here. If we break it down a little bit further for you day traders, I think I was looking at the okay, so for day traders, you can play this up and down. You have to know that the upside is a counter trend trade, because these are all below zero on the daily. T1 through T4 is below zero, so anything is a counter trend trade. Let's get this back to, and it's a counter trend trade because T1 is below zero on the 21-minute. So we're going to do a 21-minute comparison. We're going to use these. We're going to use the short-term, the T1 on the 21 cash as an anchor, and everything basically all the way back to here, which is yesterday, and you can see all these plays that were possible. Now, there are plays. Let me see. I looked at the 1597, and it really didn't give you good executions. It was too iffy. There wasn't a lot of activity going on. And I looked at the 987, which is okay, but you weren't getting. Actually, the 987 worked also. Let's go back and look at the 610. I like the 610 on T2. Okay, so you're waiting, you're letting the market open, you're waiting. Look at T2 here, or even T. You can start off with T1. As the day gets on, you have to do longer waves, because especially like around noontime to 1 o'clock, they start blipping all over. So for you day traders on T2, it comes down below. This is the old. This is where it started the day. At I'm sorry, the close of trade yesterday. I haven't updated it yet. Was 1403.25. So it came below 1403. This is in line with the same direction that T1 is taking on the 21-minute cash. So this is down here at 903, at 1403. You cover it. A half an hour later at 1398, you go long, you go short, and as the day moves on, you have to use the longer charts. So you move from 1404, and you cover it down at 1399, and then you can ride this up to 377 and then back down again. There was at least 8 or 9 or 10 points in here trading on the S&Ps. So let's take a look at what the, you can do the same thing on, for those of you who have the ABC charts, the same thing. This is A, this is B, this is C, and A wave. You'll be using the C wave on this because the A wave is a little too choppy and the B wave is a little choppy. But you can see where this goes down. Just follow the cash price as I move to below 0, above 0, below 0, and then you're still in it. And it's right now, it's down 50 cents, 75 cents at 5 o'clock Central Time. It just opened back up after being closed for half an hour. So we're down 5.50 on the day, and then another 50 cents. So, as I said in the past, these the Triton waves are only available on videos for my purpose of showing you what's going on because they're a little bit easier to look at. The ABC waves are available at Trade the Markets, and I will put up a sheet afterwards. This actually, if you trade like 4 or 5 contracts, would have paid your way already today. All right, let's take a look at something else. I want to look at I wanted to highlight Google today because Google has been an unbelievable trade. Let me see here, hang on. All right, I've got Google all set up now. Now Google on the left-hand chart is a daily chart, and it had this severe move down, gone sideways, kind of like set up for a flag. It did have a move up today of 9 points. At one point, I think it was 12 or 13. It doesn't, just because it's moving down generally, it doesn't mean that it can't have any backlashes to the upside. So I was fishing around for the best. I looked at the 5-minute, I looked at the 21-minute, and it looked like the 610 tick chart on Google. Now, a 610 actually goes back because there's not that much trading, not that many trades per, 610 trades to get one candle. This actually goes back in time to the almost near the end of October. So it's about, it's about a 5-week. This chart on the right is about a 5-week chart, even though you're only using the 610 tick chart. On an S&P, it would probably be like a half a day. But I want you to recognize that on the left-hand chart, this is all below 0 on T1 and T2 and T3 and half a T4. On the right-hand chart, it's been Google has been since it's been trending down, the 377 has been a barrier to the upside. Now, if you're looking at the daily, there is no way that you can catch this move down because the first time it goes below 0, the stock Google's already moved from 756 down to 674. There's no way that you can catch it. But if you're looking at the 610 chart and you're looking out here, each one of these moves to the downside, to the upside, you are actually in this move at 10:26 in the morning of the massive move down when they accidentally released the earnings before the end of the day. That was while this hash mark was still up. It hadn't even established a lower hash mark yet. So if you were using the 610, you were already in this. Number one, because T1 had already gone below 0, and number two, it had already bumped up against the 377 with a declining move in T1 on the daily. So you can see these moves. It follows it really smoothly. the waves get a little messy because it was such a huge move down, but you can pick it up. You can start picking it back up again. Even though it's been down, you can play these short moves. All these short moves, 6, 7, right in here when it moves above 0, it's 675 back up to the 377 to 689, and then back down again from the 377 at 689 down to 652, back up to 664. I mean, it just goes on and on. Okay, so it brings us to today. Now, even though it looks like this is a wipeout for Google on the daily, this is what's happening. This is the beginning of the day at 8:30, and right here at right when it goes over the 377 at 666, it cruises right on to 670, 674. Nice move. And the rule of thumb is, wherever it starts off below the 377, it's going to double its move to the upside. So especially when these are moving over 0. So this is, let's see if that actually holds true. Well, I can put we'll use this as a 0 line, and okay, so the move was, when this moved above 0, and it moved above the 377, if this doubled its move to the upside, if you use the 377 as a 0 line, then below 0 was absolutely equidistant to the top. So you're looking for the top there, you get out a little bit before, let somebody else have the last penny. So that's just an idea of the analysis of a stock trade going back several days and several weeks. All right, let's pick up with Goldman Sachs. I'm just going to look at a couple more here. Goldman had a nice reversal that took out 2 days of trading. It was up nicely yesterday and the day before. Today's trading basically took. I'm sorry, Goldman Sachs. I don't know if I said Google or not. It had a reversal, took out 2 days of trading, and T2 moved closer to 0, while the 610 moved below on T1, T2, and let's look at the 21. Okay, so the 21 is now below 0 on T1 and half of T2, and on its way to T3. So this should move, if this all works out the way I think it's going to, especially because it's now below the 377 on the 21, and I like trading the 21. It should move back to a 50%, at least a 50% retracement, which puts it back to 117 to 116. But I actually think it's going to move back to 112. I think it's going to hit the 233, where the 233 and the 144 come together here. At least that. And maybe where this took off in August. Back to 105. I'm actually looking for 105 as a target. Yeah, I'm looking for 105 as a target on Goldman Sachs. Now, if we look at the ABC charts, you can see that this is one notch away on that A is already below 0. B is one fraction of a hash mark away from being below 0 for the first time since November 15th, and that should start bringing this stock down also. So it's just two different perspectives of the ABC chart, and actually we can put these up side by side to look at them, and they're mostly the same where they move. You can just follow it. If you have the ABC waves, you can follow it. All right, let's take a look at one more. Okay, here's Amazon. Now, Amazon's made this steady turn since November 15th from 219 up to 245. It's just like a really beautiful, steady move. I kind of like it. However, T1 and T2 are now below zero. And also the A wave is below zero, the B wave is below zero, and it looks like at a minimum, this has, because this is already double its move to the 377 and above it, at a minimum this should come down to 235. So if you play the 70 delta on this, you should be able to, if you have, if this is a 9-point move to the downside, at a minimum, if it's a 9-point move, then you should be able to capture 6 to 7 points on an option play if you're using a 70 delta with a December expiration. Let's look at this on a 610. So on a 610 tick chart, T1, 2, and 3 are below zero. On the daily chart, on the daily chart, another reason why I like this to the downside, it looks like it's just like floating, it just keeps floating up, but in reality, if you take a fib tool to this, the high on September to a low on November 16th. We're kind of right in the trap zone between 50% and a 618% retracement. And where all these crosses happened, that's a lot of resistance to go further up, especially in light of the fact that the 610 has moved down and the 21-minute has moved down. So be cautious on the upside for Amazon. I like this for a snap back to the 377, and then we'll see if this takes T3 down below zero also, then this should come back even further to 230, maybe even 220. So let's take one more look at the S&P to see what's going on here overnight. And we are at, let me see here, 987. We're still trickling down. We finished near just off the low. I think the low was 1395, and we're at 1396.50. So you can see, as we speak, it's just starting to roll over even more. So we should have a very, very exciting week. I love playing these weeks. They're it's like speeding down the highway at 100 miles an hour. You just have to stop and catch your breath once in a while. Good luck trading, and I will see you at the next update.